JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 16th of November 2020. So yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation. It should not be considered as such and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just a quick apologies for the late start, guys, today. So the usual kind of Monday morning technical issues. But before I jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So you feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So jumping into the charts now, the first one I want to pick up here is Nikkei 225 index. As you can see, the index continues to pop higher here. This morning it traveled to the upside. As you can see, it's now closed, and the index closed nicely with a 2% gain here near this 26. Let me just drop this one a little bit lower, near the 26,017 territory. Of course, it didn't quite reach that, but it's coming there. It's very close to that level. And just a quick reminder of what that area was in the past. For that, I need to jump into actually a monthly chart, and you can see that we are near the highest point of June of 1991, guys. My next good target is the 27,251 area. That's marked by the lowest point of, if I'm not mistaken, that's April of, that's going to be April 1990, and also marked by the high of the March, the highest point of March of 1991. Basically, we are at these levels. I mean, it took us only about 20 years to get back to these levels. Okay, that's fine. Take your time. Actually, not even 20 years. It's 30 years. So, well, I mean, that's still a decent time to be waiting for that area. But again, if you manage to wait all that time, so congratulations. But yeah, 30 years, well, that's quite a decent amount of time to get back to these levels. Basically, for now, yep, we're gonna go step by step on this one. For now, of course, yes, looking at this picture, it looks quite steep. Don't get me wrong, there is a possibility for this one to maybe correct back down at some point. However, we need to see that that trigger point, that kind of that potential turning point. But again, at the moment it's quite difficult. It's similar to the Turkish lira when I looked at the euro against the Turkish lira. So basically wait for that confirmation break, guys, to the downside before, and for now at this point in time, for example, just one of the ideas here, that if this 26,017 territory does provide good resistance, then we see a reversal back down, and let's say a drop below the 25,254 territory right here. Now this is where I could maybe consider a bit of a corrective move here to the downside. But again, at the moment, it's a little bit tricky here because it's one-way traffic, is just to the upside here. But again, we're approaching this this key important level right here near the 26,017 mark. So in a way, you could round it up just to the 26,000 level. So keep your eyes on that one. Shanghai Composite, a little bit more on the modest side here, but so far it's working out according to this little arrow that I've drawn last week. Basically, let me just adjust this a little bit because we have shifted. So The initial idea was that in a way it could drift a little bit lower, maybe find support near the 3,326 territory, somewhere around here. You can see that it drifted further below that. It tested the 21-day EMA, and that's from where it reversed back to the upside. So in a way, I would say that it kind of worked out, but maybe not ideally. I mean, but the fact that the 21-day EMA did provide good support, yes, that's wonderful. Now the big question here is, can we see this one moving further north, basically? So again, because the this one's a little bit on the modest side, and for example Nikkei is really pushing higher and higher, in a way it's kind of leaning a little bit more towards that potential kind of corrective move here. So that's why probably I'll take a bit of a careful approach here on Shanghai Composite. So for example, if Nikkei starts correcting heavily to the downside here, yep, it could drag the Shanghai Composite as well after itself. So that's why probably be very careful. And if you want to look at some higher levels, well, at least wait for a daily close above the 3,368 territory, somewhere around here, guys. Then of course you need to be very careful near the highest point of last week, which is around the 3,387 mark. But if that gets cleared now, yep, of course this would confirm a forthcoming higher high, and we could aim for the upper bound of the range here, because don't forget that the index is still kind of in the range, although it's still trading above, overall it's still trading above this upside support line, but from around mid-July the index has been moving sideways. So that's why for now, yep, be very careful with that. In terms of the downside, well, probably going to be a straightforward here thing, because then we would like to see a drop, a daily close actually below the 21-day EMA, and then we could consider maybe a bit of a move here towards this upside support line or the lower side of the range. Now jumping into the German DAX here, and the index is a little bit on the modest side, of course. Now looking at this picture here, basically it seems that it's flagging out. Now if we look at the cash index, and let me just quickly jump into that one, the index is currently trading near the 13,000 excuse me 200 level. So basically it's back above this area right here, the high of the 12th of October, or in other words, the highest point of October is back above this level, but still below this 13,297, or in a way you could round it up towards the 13,300 barrier right here. So if we get a nice push above it, then yes, this would confirm a forthcoming higher high, and more buyers could be joining in and potentially dragging this one towards the highest point of September. So for now, again, this is the idea probably that I'm going to stick to. Let me just put an arrow here. So basically the upside, I'm going to consider that if we get a push above the 13,300 level. If we get that, then yes, like I said, we'll aim for some higher levels, initially aiming for the highest point of September near the 13,460. But if that gets cleared, well, I mean, the next target here is the 13,795 territory right here, which is the highest point of February. So yep, for now, guys, keep your eyes on this one. In terms of the downside, pretty straightforward. We need to see a drop back below this downside line and below the 12,842 territory, and then yes, lower levels here could be met. Now DXY, DXY here is declining a little bit. However, it remains above this 92.47 territory that I talked about previously. So now the big question here is, can it actually provide support? If it cannot, then yes, it may open a break of this area, may open the door toward lower areas. However, I would prefer to wait for a drop below the 92.24 level right here in order to get a little bit more excited with the downside. So because as you can see back here in the beginning of November, this area did provide very good support. So a nice good drop below it may open the door towards the 91.74 75 territory, which is the lowest point of September, or even below that. So again, a lot of levels to keep an eye on. With the upside, as I've mentioned to you previously, that now previously I talked about this 92.97 territory, but in a way we actually can shift this a little bit higher here and probably keep an eye on the highest point of last week, which is around the 93.21 zone, approximately around there. And then if a nice good pop above it may open the door to a slightly higher levels. But as if you remember last week, I've mentioned this level here as well, the 93.55 level. So that could be that little other obstacle on the way. So basically, if we get a nice pop above the 93.20 zone right here, then yes, and if we get a nice daily close as well above this area, that's probably very important, then yes, we could consider a bit of a higher move here. Then of course I'll target this 93.55 territory, a break of which could lead the index further north. Now gold is very difficult, to be honest, because again, first of all, it did drop back below this downside line last week, and in a way kind of showed willingness to drift further south. However, it got held here by this 1860 territory right here, which is marked by the lowest point of October, and this area did provide support, although it was violated a few times, but still the daily candle remained above this area. So that's why I'm going to keep an eye on, I'm going to continue keeping an eye on this one. That's going to be the trigger point, after a break of which we could consider kind of more lower areas. But because it's kind of climbing higher again, I mean, this is where the difficulty is. First of all, let's get rid of this downside line. The second thing is that it's currently getting a hold up near this 21-day EMA, or should I say below this 21-day EMA, shown as the yellow line. Now, on the other hand as well, it could be forming a possible bearish flag here. So again, we know how a bullish flag looks like, so that's why this one could be a bearish one. So basically, a potential move lower here could be possible. And of course, this idea is getting kind of supported also by the fact that the price is struggling to move above the 21-day EMA. So of course, let's see how this is going to play out. But probably previously I talked about this level for the upside, the 1911-12 zone, approximately around here. I'm still keeping an eye on it, so if we get a nice pop above it, then of course we could start looking at the 1933 territory or even above that. But we'll go step by step on this one. We'll go slowly. I'm not going to drag this one way too much to the upside, but yeah, for now, guys, that's the kind of the game plan. That's the situation here. So if you want to look at some higher levels, but cautiously, of course, then we need to see at least a push above the 1911 territory right here. But for the downside, probably let's be a little bit on the cautious side, a little bit on the safe side, and let's wait for maybe a drop below the 1860 territory, somewhere around here. Now jumping into WTI oil, and last week I talked about this potential idea where we could see a bit of a correction here to the downside. Yes, we did get that. Then I was saying that keep your eyes on this little steep, tentative steep short-term upside support line taken from the low on 2nd of November, and yep, you can see that the commodity drifted lower, tested this upside line, and today, for example, we're seeing that it is turning kind of below this upside line, but it really is trying to get higher, and it's currently kind of sitting slightly above this. So basically what we can say here is that maybe actually this upside line is not really the one to watch. So we can get rid of that, and mainly I'll continue focusing on this level here, this 41.46 zone. If we get a nice pop above this again, then I'll start looking at some higher levels again. But if it drops back below the 39.23 territory, now not only that it will be below this high of the 4th of November, but basically or actually we can start looking at this level right here, even a little bit better. Maybe that's the 39.34, just to be but yep, that's probably going to be a little bit on the better side. So this 39.33 level, 34 level, marked by the high of the 5th of November and near the low of the 10th of November, if we get a drop below this, this would already place the price below all of its EMAs, basically. So, and maybe more sellers could join in here. So keep your eyes on this one. Bitcoin. This upside line didn't really work out. So, but what did work out out is this 15,888 level. So what I said previously, that this could be seen as a good barrier, which if broken could open the door towards higher levels, and it did so. And now it acted as a good support area. So basically, long story short, for now, where we're keeping an eye on here is the highest point of last week near the 16,481 levels. So a nice good pop above this area may open the door towards higher levels, because a forthcoming higher high would be confirmed, and more buyers could be joining in. At the same time, let's not forget that we're trading nicely above a few of these upside short-term upside support lines, all tentative, of course. We can draw one here as well here, so I'm going to keep this one for now. This is taken from the low of the 19th of October, and basically, if you want to look at some lower areas, we would like to see at least a drop back below the 15,888 level. Now, ideally, a daily candle staying below this area could invite more sellers. However, of course, if we draw this one, if this somehow this upside support line does provide a hold up here, then we could see a nice rebound and a push back to the upside. But if that gets broken, and if it does get broken, then the price would also be placed back above the 21-day EMA, shown as the yellow line here. So something for you to keep in mind. Now, oh, by the way, in terms of the upside, if we get a pop above the 16,481 territory, now the next target, and for this one I probably need to jump into a monthly chart. So the next target is the highest point of January of 2018, and that's roughly around the 17,252 territory. And by the way, look at this, move. It quietly climbed back to these levels here, the levels that we saw here at the end of 2017 and the beginning of 2018. So this was this big hype that everybody was jumping on a bandwagon and taking advantage of this crypto. Now, the big question here is, can we actually climb all the way to these previous highs, the highest point of January of 2018 and the highest and the all-time high, which is around not far from that psychological 20,000 mark. So this is going to be very interesting to see if we can do that. For now, it seems that it's on the right track, but yep, be very careful with this, guys. And of course, something to keep in mind here as well, in terms of the downside, if we get a drop below this 13,770 territory, somewhere around here, now this is where it could turn out to be ugly for this crypto, and we could see lower areas. So basically, this is something for a long term. This is a long-term view, and yep, for now everything's kind of leaning a little bit more towards the upside. You can see that on the 4-hour chart it's pushing higher, but we need that confirmation break above the 16,481 territory in order to aim for some higher levels. Now, jumping into few pairs, and basically let's start off with AUDJPY. So this morning we got some data from Japan, if I'm not mistaken. Let me just quickly double check. So yeah, the preliminary GDP figures. So the Q3 year-on-year number came out much better than the forecast, and of course not to mention the previous number, which was in the minus 28.8%. The actual number came out at a plus 21.4%. So basically we can see AUDJPY kind of popping higher initially. And here it kind of works a little bit in the opposite way, because normally the yen is seen as a risk, as a safe haven, and basically when the economy is doing better, then the yen tends to kind of fall here, so it doesn't really kind of go nicely with the good data and the good Japanese data. So here, for example, you can see that from the technical side, you can see that we managed to break this upside line. So although the data came out okay-ish, still we'll continue monitoring the overall kind of market sentiment, because at the moment the market is in the risk-on environment. So basically everybody's jumping into riskier assets and yep, enjoying their time. But here, for example, looking at this picture, this kind of makes us cautious a little bit, and especially with these indices, the indices that I talked about, because given that they're already quite let's say overstretched in the in the short run. AUDJPY is kind of indicating that there could be a possibility for some downside. So it broke this upside support line taken from the low of the 2nd of November, and currently is still trading below the 76.52 territory, which, as you can see, acted as a very nice area of resistance recently. So now, first of all, let me just adjust this this arrow here. Now, the idea here is that given that it's kind of struggling to move higher for now, and let's say if it continues to struggle to move higher, and struggles to get back above the 76.52 territory, this is where it could become interesting, because I mean it could start reversing back down, and basically risky Aussie and safe haven yen, that's going to be a very good indication that the market environment is changing to a risk off one. So that's why be very careful with this one, guys. I mean, if we see this one starting to drop heavily here to the downside, then well, keep your eyes on the indices as well. In terms of the downside here, what we could do here is, of course, previously I talked about the 75.48 territory, but we could start looking at already lower areas if we get a drop below the 75.76 level right here, marked by the low of last week. Actually, not the low of last week, the low of Friday, and then yeah, we could start looking at some, like I said, further declines. Now, jumping into a USDCAD. Now, this one is quite interesting, but basically for now it's just still stuck. What we can say here is that the pair seems to be stuck here in a little range, I would say. So not a clear one maybe, but nevertheless a range. So let me just probably copy one of these and put it right here. So that's the kind of little situation right now. So what we can do here is keep an eye on these two levels. Now, basically, given that we had a nice rebound last week from the lower bound of the range, there is a potential for this one to move maybe higher, but within the range. So, but I'll consider this idea if where's that arrow? If I get a push above the 1.3177 mark right here, and then yes, we could aim for that upper bound of the range. For now, you can see that the pair is declining, but it's still kind of within the zone here. In terms of the downside, we'll take a very conservative approach and wait for a nice good drop, a daily candle staying below the 1.2995 territory, and then I'll aim for some downside. But at the moment, yeah, that's going to be a little bit of a difficult one here, so be very careful. GBPUSD. So the pair is also kind of in undecided mode, and basically for now it's kind of still trading above this upside support line taken from the low of the 18th of May. It's struggling with this barrier. We can see the 1.3287. So in a way, if you're looking for a good breakout point for the upside, well, I mean that's the level right here, guys. So basically, as you can see, that's the high of the 7th of September. Although last week we did get an overshoot here, but it didn't really kind of stay above it. So that's why it makes this level quite an interesting one to keep an eye on. In terms of the downside here, I would like to see maybe a drop below the 1.3093 territory right here in order to maybe examine some lower areas up until this upside support line. So be very careful for now. EURCHF. I talked about this pair last week, and just a quick update. Basically, you are probably already seeing here, or if you remember what I talked about in my videos last week, basically where I was covering EURCHF. So basically here what we have is a potential bullish flag. So we have a nice pole here, the little consolidation here, and basically, yep, there is a possibility for this one to move higher, especially if it pops above the 1.0825 territory right here. That's the highest point of last week. So all looks fine here for the bulls. However, we're also trading above the upside support line taken from the low of the 2nd of November. However, if it does pop above this, yep, keep your eyes on this downside line. So basically, it's not really a straightforward thing here. Yes, if it wouldn't be for this downside line, then I would probably be a little bit more bullish. But because we have a kind of an obstacle straight away after a break of this key important resistance barrier here, then that makes a little bit of a difficult one here. So that's why if we get a pop above this, yes, wonderful, good news. But if it continues to travel higher and then moves also above this downside line, now this is where it could become a little bit more interesting for more buyers. And finally, Euro USDs here. So I'm going to probably rush through this one very quickly because I need to jump off right now because my colleague is jumping in after me. And basically the same idea remains as I talked about on Friday. I need to see a nice good push above the 1.1880 level here in order to aim for some higher levels. And for the downside, I'm still looking for that drop again below that 21-day EMA in order to consider maybe some lower areas. But at the moment it's just stuck here, so I'm just observing the price action. So guys, I do apologize I had to rush through this a little bit. Like I said, I need to jump off, but thank you very much for joining in. I'll pick up on some of these instruments later on. My trader's tea time as always, guys, 14:15 GMT. So have a wonderful trading day. Stay safe, guys. Have your stop losses in place and everything will be fine. Thank you very much and bye-bye.